Let's take a look at the Nvidia stocks, what's happening, and what the forecast is. We'll definitely look at the volatility, as we can see that the volatility of this stock is increasing. We'll also touch upon the trading volume of options, which will show us where and what limit of growth this stock might reach. I'll tell you straight away that $1,000 is not a level we'll break through in the near future. I'll also show you the 3D volatility, and I'll also show you another strategy where you can earn both on the decline and on the rise of this stock. Let's take a look and return to the Nvidia stocks. What's happening here? Actually, there's not much happening here. Practically nothing has happened in the past 2 months. From early March to early May, 2 months, we're in a sideways movement in consolidation, where not much is happening. In this market, only the market maker and those who sell options are making money. My friends, those who sell options collect all the premiums and earn a lot of money. Let's look at the volatility. What's happening? The volatility is quite high. This is partly due to the earnings season. Yes, we have such stocks as AMD, other semiconductor stocks. Naturally, this also involves options, derivatives, and partly the Nvidia stocks. Volatility will also continue to remain high here, because in just 2 weeks we will have earnings reports. We will closely monitor them, what growth rates, what they will show us, we will definitely consider, but as we can see, after the previous earnings report, we are in a period of consolidation until the next report. As we can see, after the report on May 30th, 2023, we grew very significantly and practically we spent all the time in consolidation until the next report we started growing again and again until the report in February 2024. After the February report, we entered into another consolidation phase, and of course the reports of this stock set the trend. If we start to decline after this report, it's not a very good sign, which by the way could very well happen. Let's return to the volatility. I'll show you the volatility smile. As we can see on the nearer expiration, the volatility smile increases both on the call side and the put side. However, if we look at the more distant strikes, volatility increases only on the call side, not on the put side. This is a normal situation because investors hedge their risks by buying puts. Let's look at the historical and implied volatility at the moment. The white line represents implied volatility, and the gray line represents historical volatility. As we can see, they are roughly at the same level, but implied volatility is higher than its historical values. I always say you can trade not just the stock itself. Actually, it's difficult to determine where the stock will go, up or down. It's much easier to trade volatility because volatility always reverts to its historical values. For example, I can show you what artificial intelligence can do. We can predict that volatility, for instance, will drop by 20% by mid-June, and our artificial intelligence can help us form strategies. Some strategies have a 100% chance of profit. Let's consider one of these strategies. We're suggested to buy one call option with a strike of $800 and sell 2 call options with a strike of $895. Yes, this rather complex and unique strategy against electiveness looks like this. As we can see, there is also income involved here both during growth and decline of this stock. It's a fairly good strategy, but it needs to be managed. We can compare it with other strategies, but as I always say, I don't recommend opening strategies based on any advice or signals. It's risky. You need to understand the logic of what's happening, the logic of events. Let me show you. Trading volume is the most important thing happening right now. As we can see, we have a very, very large volume. It's centered around the $900, $950, and $1,000 levels. Regarding the bid volume, the largest volume is at $800, and from $800 and from $850 to $900. Here, the largest volumes are concentrated. As we see, there's a wall at $900 and it will be very difficult to break through because we've touched it several times and couldn't break, partly due to this colossal volume. Also, the next level is $950 to $1,000. Here, of course, the growth potential of this stock is hindered by the fact that there are a lot of call. I also remind you how market makers work, what their main task is. Their main task is to sell call. When they sell call, they use delta neutral hedging. For example, they buy stocks, if we're talking about call, according to the delta. The higher the stock rises, the more call they have to buy. And if there are call remaining out of the money, they receive all the premiums. So to speak, they take an additional profit for themselves. And all this accumulated hedging, they will also have to close. And what we can see is that this huge volume, if we surpass it, then market makers, among others, will have to hedge all this huge volume by buying call, by buying stocks. And of course, this can give a serious boost to this stock. So I assume that this level will be held very strongly. That's my opinion. Also, the next levels will also be held. I assume that until the report, most likely, we won't grow beyond $1,000. I base this on the derivatives market, on the call market, and after the report, the situation may change in one direction or another. Also, let's look at the 3D volatility. It always helps me form a competent strategy. Here we have all the information centered about the strike, about the expiration dates, a very useful thing. What I can say is that I remind you of my philosophy that no one knows where the stock will go. It's impossible to predict price movement. The most important thing is competent management of positions and portfolios. That's my strategy. I'm not saying it's the only right one. It just helps me make money. And what I can say is that in terms of risk and profit ratio at the moment, it's not in the investor's favor. I'm saying that you can make literally $50 or $100, but you can lose much, much more. Yes, I understand that many say that the stock will rise. We have very good reports, very good profits, my friends. All this is good. Someone may talk about moving averages, trading volume, technical indicators. I'm going to talk a bit about something else, about the relationship between risks and returns, not in favor of the investor, especially considering such huge volumes of options. At the moment, I wouldn't acquire this stock. Again, this is by no means a recommendation, advice, or suggestion to sell these stocks. You should have your own strategy that you follow. If you're buying these stocks according to your strategy, great, I'm happy. But personally, my strategies don't signal buying this stock. So how can you make money on it then? As usual, I've developed an interesting strategy. Let's take a look at it. As we can see, no matter which way the stock goes, we profit. If the stock rises to $1,000, we'll earn $13,000. If the stock falls to $750, we'll also earn $12,000. But if the stock suddenly starts to rise or fall sharply, we may lose money. However, again, I don't advise you to open this strategy. It's complex, involving the sale of uncovered call and put options, and you could lose money on it. This strategy needs to be managed, selling options at one point, buying options at another. It's quite complex. Let's see what the market forecasts. 30 days, and the market suggests that the stock will mostly be in the range of around $850. In other words, the market assumes that in a month, the stock will be slightly lower. If we look, for example, at mid-July, the market says the stock will be around $830 to $840. So again, a slight decrease. And again, this is not my opinion, it's the market's opinion. I don't recommend going against the market because you might win once or twice, but in the long term, the market is always right, especially considering the current situation, which is quite complex. I fully admit that we might experience a recession in 2024, so a stock like this one could plummet significantly. I fully admit that the minimum target could be $500, but if there's a serious downturn, we could easily drop to $300. Yes, it might seem unrealistic or exaggerated now, but believe me, it could very well happen. Also, I fully admit that we might not overcome these peaks for a very long time. Again, this is my view on this stock, but it's by no means a recommendation for any action. Additionally, a new experiment is starting soon where I'll be managing a portfolio from scratch. I'll be showing which stocks I buy, what I do, and I'm already preparing a special spreadsheet. This spreadsheet will be available to everyone absolutely free. Anyone can check the balance, see what's happening, which stocks I've bought, and why I bought them. I also advise you to watch my previous video, where I explained the principles on which my portfolio will be formed. Everything will be as transparent and open as possible. Subscribe to not miss the start of this experiment, and also write your questions in the comments, and I'll try to answer all of them. Good luck to everyone.